I am delighted to have a longtime friend, Doug Duncan, who is with a small mortgage company called Fannie Mae. And we have known each other for a while. Actually, we met at the Richmond Fed during or right after the financial crisis.
Right.
So we got a few folks. We're up here Labor Day weekend. It's a beautiful time.
Oh my gosh.
Nice
Terrific.
time to visit.
Yeah.
Couple quick questions. When we were together at the Richmond Fed and we were looking at high unemployment, labor participation rates, and there were a whole lot of forecast issues off of the labor markets then. Today, unemployment rate, 3.6, 3.7, 158 million people legally working in the United States. We don't know about the other. What do you see now? How do you look forward on labor conditions and the housing market, what it means for you at Fannie Mae?
Well, a couple of things. One is labor force participation has picked up.
You were right on that.
That's
You didn't hit my low number. It's a good thing. That's right.
Yeah, so that's good news. One of the things we learned in the crisis is that if you're going to make a 30-year mortgage, it's a good thing if the person has a job. So,
okay.
But seriously, there was a lot of discussion about labor force participation, particularly the aging of the boomers and whether or not they were going to get replaced, and people have come off the sideline. But I would say this, we watch the monthly Labor Department report with in mind the pace of new additions to employment, and that has been gradually slowing over the last year. Our thought is to keep unemployment roughly where it is, you need to add 100 to 120,000. I think the most recent month was maybe 140, so we're still adding to that. On the housing side, what you've seen is the significant pickup in employment for the younger households. And you're starting to see income growth at the lower income levels, which is, all those are key things for driving the demand curve for housing. And actually, starting in about 2015, the drivers of the demand curve, against all the media reports that you read, have been the millennials. They are now the drivers. They've told us.
You're pretty optimistic.
I am. Housing is a good place to be.
Optimism in America.
Yeah.
Remarkable. How about that?
Well, it's a simple observation. People have always lived in a structure built on land, somewhere in proximity to where they work in a structure built on land. I don't ever see that changing.
Okay.
So,
trade war, does that worry you? Protectionism?
Absolutely.
Is that a shock? What happens there?
Absolutely. I think something on the order of 40% of our exports is agricultural products.
That's your home turf, too.
And that's my home turf. Grew up on a farm in Minnesota. Went to North Dakota State. Beans and corn are big up there. So no question, worried about that. Talk to people about that. They are worried about that. In the big picture of trade, there's two things. One is it's hard to get all economists agree on anything. But one of the things that almost all of them agree on is that freer trade is better than less free trade.
Right.
And I'm absolutely.
There are a few economists who don't see it that way. We know them.
We do.
We do.
And can probably count them.
Do you need them all to do it?
Probably not. So the other thing that in a global economy that you worry about is when things like the tariff discussions come up, what it does to the incentives of company to invest.
Right.
And investment is the driver of productivity gains, and productivity gains are the driver of real income growth. And if people are going to buy a house, to us, it matters if they have real income growth.
So real income matters.
Absolutely.
And real interest rates matter.
Absolutely.
And real interest rates in the United States are near zero. They're very low.
Incredibly low.
That should be bullish for housing.
It should. Interestingly, it looks to us like the cyclical peak in housing was 2017.
Wow.
So we've seen it slowed in 18. It has slowed in 19. Now, recently, we've got dramatic drops in interest rates. So refinancing
Right.
is going very strongly.
Right. You see that every day.
Absolutely. We see the by minute flow through the company.
All right. So one last question. The unknown, and we don't have it in the U.S., but we know we got 17 trillion total debt in the world at negative interest rates. And we know that somebody in Denmark can go buy a house, get a mortgage, and that mortgage has a negative interest rate structure. I buy a house, I pay back less than the face of the mortgage. So here's my question. We don't have it here. Does it worry you if it were to come here or get close here? And what do you do? What do people do? How do we prepare for a contingency which I hope anyway, we never will see?
Well, that's a tough one.
Tell the folks who are watching that.
Remember, before or at the origins of the mortgage crisis, the single biggest lender in the mortgage space was Countrywide.
Mm-hmm.
Someone asked me, do you think it's conceivably possible that Countrywide could fail? I said, they say never, but I don't see how that happens, and Countrywide failed. So on the question of whether we will see negative interest rates, never say never. It's very difficult conceptually because none of the models in which we were trained include any background. I defy you to find a textbook in economics that suggested it has an extensive or even a minor discussion of negative interest rates.
Right.
I'm hopeful that the fact that the U.S. is still growing at around 2% growth is going to be sustained long enough so that we can lead the rest of the globe back into a more, what you could say is a rational view of real interest rates. I don't know.
Hope is not a strategy.
It is not. Absolutely not.
So
we're preparing. We're trying to think through. This is whole cloth, new area to think about. So we are trying to think through how do you deal with that. I think it was you that said to me that if duration is actually longer than the life of the asset, how do you deal with that?
How do you deal with it? Well, that's a subject for another fishing trip and a glass of wine.
Works.
Let's agree on both.
Liquidity
Doug
matters.
Duncan, Fannie Mae. Thanks,
Thank
Doug.
you.